Hey traders, Stan here, and in this video I'm gonna share with you some useful tool which I use for decision-making process. It's called Fedwatchtool. What is that? Chicago Mercantile Exchange has a tool that enables us to assess probabilities of an interest rate hike on the next meeting. They use federal fund futures for that purpose, and forecasts are pretty much accurate. So, for example, if inflation is going up, people start protecting against inflation because they believe that Fed will raise interest rate, and they start buying more American dollars, selling more stocks, and buying more metals. That's just a particular example from today's markets. And if you see that probabilities of interest rate hike are increasing week by week, day by day, if you see that in dynamics, you can say, okay, probably the sentiment is inclined towards defensive assets, as we have it now, by the way. So you can plan your trades accordingly. So let's go to charts and I will show you exactly how it works. All right, so first let's go to the website of CME Group and go to web page of this tool. So how do we do that exactly? So if you go to Google and put here Fedwatchtool, okay, so you have the first link, you follow that link, and here you go, you have the web page of this instrument. So how do we use that? So for example, if we decide to pick the upcoming meeting of Federal Reserve in May, so we can assess probabilities of different scenarios. First of all, I don't know, 69% of people are believing that we will have one step hike, and 30% of traders and investors are believing that we will have two-step hike. So which means that the interest rate will be raised towards 75, 100. How do we use that exactly? So trading is all about change. It's all about dynamics. So, for example, if you go to historical tab here and let's try to assess the probabilities for March 2022 for the upcoming meeting, you might notice that we had some, modest probabilities of an interest rate hike to be raised to one step to 25 and 50, and the probabilities started to move up substantially at the end of 2021. So you see this orange line. Orange line is the probability of one step hike on the March meeting. So then it started to go up and up and up and up. So the probability had reached almost 70% in January 2022. Okay, and beyond that, we started to see expectations of a two-step hike, which is a green line, boosting in February. So in February, investors and traders started to discount the probability of a two-step hike because inflation was really gearing up very significantly. So you see this period from February, first 3 weeks of February, there was an increased expectations of accelerated interest rate hike. So not only traders were sure that it will be just one step hike, but some traders were aware of a two-step hike. So you see this peak February 10. Actually, some traders were thinking, and most of them were thinking, that we will have the two-step hike. What was happening with assets back then? Okay, so let's remember the situation. So with assets, if we go to chart and let's put here American dollar index, US dollar index, let's go to daily chart. What do we see here? So market was basically flat. I mean, the US dollar index was basically flat. In the beginning of January, nothing really was happening. Then it had some rise after the first meeting of Federal Reserve. Then it has gone down. It was consolidating, and it started to slowly go up and up and up and up, starting from February. And by the end of February, so it was already trending. So for March 8, it was already trending. So you see that these expectations was actually driving this market up, and the same situation with gold. So if you take a look at gold, we see that the move for gold had started exactly with the beginning of February. So before that, gold was moderately bullish, but basically sideways. It was basically sideways. And actually, starting from February 2 to be exact, so we are having the uptrend. And as you see, this uptrend correlates with the sorry, let's go to historical chart once again. So it was correlating very much with the increasing expectations of a two-step hike. So you see that the probabilities were very, very high. So investors, traders starting to buy more gold to protect against the potential inflation. But not only gold, also if you build here the chart of, let's say, palladium, you have the same rise of palladium starting from February 9. So you could also have silver. Also, it's beginning to go up since February 4, and lots of metals were moving up. So this is a behavior of the market which we can call defensive. So inflation was so high that market starts to discount the probability of the two-step hike and buy more and more of defensive assets. So when you trade charts, when you don't see this information, it might be quite difficult for you to understand what the market is really doing, because gold was not moving before. It was just consolidating. So, and you look at the chart of gold and see, okay, so what's happening with gold? Actually nothing. So it's basically sideways. But when you see accelerated probabilities of two-step hike, so and you see the dynamics of gold, you may say, okay, something significant is happening. Probably I should jump on gold. And that's exactly what was happening here. And also here you see the end of February. It's the invasion of Russia to Ukraine. So March 26, I believe, March 26 or 24, something like that, right? So you see the spike. That's a very significant spike. But even though it was sold off, gold still continues to go up. So now expectations are not really so sharp. So if we go to May meeting, to meeting in May 2022, and what do we see here? Well, we have probabilities of a two-step hike for May at around 67%. Probably we will have this interest rate hike in May. As for 75 towards 100, we have 50% of probability. So if you will see that this purple line is starting to move higher every week, so if it will create some trend, so probably you will see that market is trying to push more on the defensive asset, because it thinks that inflation is going faster than Fed can react. And with that, of course, you might think again of buying some metals, because gold currently is at a good support zone, I believe. So it can continue going up. So it might be another entry point for gold. And you will have the fundamental confirmation in this case, not only technical, but also fundamental confirmation. So here's the the process. It's pretty much simple, nothing complex about that. But I know that's not easy to trade sentiment. It seems like a complex thing. It seems like a thing that might be not so understandable in the first place. But if you have any questions, please leave it behind the video, and I will do my best to make some more detailed explanations.